Well, greetings to all my investment clients. My name is Walter Measers. I'm your wealth manager and tax advisor. This is our first video kind of doing a stock market recap. These will be weekly videos that I hope to get out sometime either Friday evening or over the weekend. So every week expect an email with an attachment of video talking about what happened last week in the stock market and potentially, what's coming up, any news in the following week. Just full disclosure, this video is not intended as investment advice or a solicitation to buy or sell any securities. Please don't make any changes to portfolios if somebody else is watching other than my clients. Again, this is for information exclusively for my clients. So the goal of these videos, weekly is going to be just kind of give you a perspective of what happened in the market and what is our research company telling us potentially, probabilities of which direction the market is going to go. And again, I stress these are probabilities. These are not forecasts. These are not predictions. All we can rely on is probabilities of what's the probability of a market continuing going up or maybe a start of a major pullback. So on the screen, what you see is I'm comparing sectors, indexes. And there's three of them right now that I'm just presenting, QQQ, TLT, and SPY. What is QQQ? It's an ETF that primarily represents technology companies. TLT is long duration bonds, longer than 20 years. SPY is really the S&P 500. It's an ETF which represents the broad market. Currently, our clients have exposure 30% to QQQ, 30% to SPY, and then it's not on the screen, BIL, which is ETF, which is short-term treasury notes, which are very secure, very safe, fully guaranteed by the U.S. government, paying on average about 4.3%. So let's dig into these indices, this chart. Right now I'm looking at a 5-day chart because I'm recording this on Monday, February 24th. So just want to go back to last week. The markets right here where I'm pointing to, we're kind of trending up, not really having any major up or down. But then there was a pullback. There was some bad news. The economic data, inflation was higher than expected, so the market kind of pulled back. And then February 20th, it was trying to find, it was just treading water pretty much. And then there was bad news on February 21st. With some economic data from Purchasing Managers Index, which really tracks the activity of manufacturing and service sectors. And it was a very negative reading. The market didn't like that, so there was a pullback of S&P 500 was down about 1.7%. Technology driven was over 2%. No surprise that there was a pullback on negative news. Is this a reason to panic or make major changes to your portfolio? No, because typically when there's a pullback to the stock market based on news, typically within 2, 3, 4 days, the market rebounds and starts to make money, have the momentum to the upside. Again, these are probabilities, not certainties. So if we look at a 1-month chart of these ETFs indices, we can see the stock market really lost some money, 1.5%. Where TLT, or the long duration bonds, is up 3.5%. So at the point of me showing, long duration bonds versus stocks, so kind of bonds versus stocks, there's an inverse reaction. When stocks are going down, usually long duration bonds will go up. Not 100%, but again, most of the time that's what happens. So if we look at 1 year out, we can see the markets. There was a pullback in April where everything, bonds went down, stocks went down, and then momentum started to go back up. And again, here we go again. In July, there was actually almost over 10% pullback on the stock market. And at that point, we don't know if that was going to be a start of a major drawdown. Really, nobody knows. So we were cautious in this area, and our clients did not suffer, the same downside as what the markets did. And then the market decided, hey, this is not so bad, the news, and it started to recover. Not straight up. Nothing goes straight up in a linear, just upside. There's volatility, it goes up and down, and then as you can see right here, first of the year for the month of January, kind of very choppy. So it's right now what that's telling us, the market's trying to find a direction. Which way it's going to go? Again, these are probabilities, no certainties. We really don't know. We just have to follow the money. And what we get from our research company, which is Technical Traders, is they follow institutional monies, which really drives the direction of the stock market, whether it's going to go up or down. So right now, the momentum, institutional monies, or the research that we're getting is there's still a probability of upside potential for the next 1, 2, 3, 4, 5, 6 weeks. We don't know exactly the time frame, but the trend is up. How much could stocks still go up? Again, these are probabilities. Maybe we're looking another 3 to 5 to 6%. But I think what the research we're getting is telling us this is probably the final push before there's some major correction. Then let's look just at 5 years. Well, now let me go back to the 1 year. As you can see, the inverse relationship, long duration bonds, when stocks are going up, bonds, long duration bonds, is a horrible investment. And if we look at shorter time frame, going back to 1 month, again, you can see the inverse reaction when stocks are going down, bonds are going up. So let's go back to the 5 year. The long duration bond in the last 5 years would have been a horrible investment. Absolutely horrible, 40% down. That's why we're not in bonds, because there will be opportunity to get into bonds, but not at the moment. Bonds did extremely well when during COVID in 2020, bonds had a very positive rate of return where the markets lost almost 40%. So we are looking at sectors and looking at probabilities, which sector has the greatest probability of making money for our clients, both in a bull market and a bear market. So on that note, hopefully you find this video informative and just gives you some perspective of what we're thinking. Just remember, I follow client portfolios on a daily basis. We get research on a daily basis. Does that mean I'm going to make changes on a daily basis? No. Again, these are probabilities of what direction the stock market is going to go. Next week, there's some very important news. Technology companies are going to be reporting some other economic news. So depending, if there's negative earnings, negative things in the news, expect the market to kind of pull back. How much? We don't know. But again, rest assured, we monitor your portfolios on a daily basis. That doesn't mean we're going to make a change, but we're quite aware of the risk in the portfolios. Because last note, you have to remember, the higher the markets go, the greater we're increasing the risk in that portfolio. Because nothing goes straight up. So the fear is, if we look at the last 5 years, there were some major pullbacks. And again, are we at this topping stage, what we call stage 3, where there isn't that much more room where the market can go up? The probability right now is actually greater probability at some point there's going to be a pullback. Is that going to be 10%, 20, 30, 40? We really don't know. But the way your portfolio, our clients' portfolios are positioned, we are protecting, and we're going to minimize any downside exposure if there is a correction. So thank you for watching. Hopefully this was helpful. Give us feedback. Either call me directly or email me. Give me your thoughts of what you thought of the video presentation. Again, thank you for watching, and stay tuned. We'll see you next week.